Hey, what's going on? Vitaly here with Raise Ready Systems, where we specialize in filling our clients' calendars with accredited investor meetings, those who are looking to write $100,000 to $1 million checks. So I wanted to make a quick video here because this is a question that we get so often, and it's whether you should be doing a capital raise that's on a deal by deal basis, whether you should have a fund structure or something evergreen, right? So I want to just do a little bit of a deep dive into those different strategies, and that way you can decide what is the right approach for you. And we'll show you a little bit about what our thought process is from the marketing perspective. So let's take a look. I'm going to share my screen here and let's dive in. So you're either looking to do this on a deal level, meaning you're doing one asset at a time, and then you typically have a 60 to 90 days once you lock it in to come up with the money. When you are raising capital online, and this is the first time you're doing this, even if you had, a ton of money to invest in your marketing, this is not an approach that we would recommend. It's just simply not enough runway. Remember, at the end of the day, you're getting in front of strangers. And so to get strangers to write 6 to 7 figure checks, it takes a little bit of work. So you have to account for that ramp up period. So this is what that typically looks like. With our approach, it takes about 2 to 3 weeks to launch a campaign. And then on average, you can expect to have an investor meeting within 5.8 days. Okay, so figure between weeks 3 and 4, you're on investor meetings. Then it can take anywhere from a couple of days to 30 days or 60 days or even beyond that to actually convert any investor meetings into capital. So to have a conservative approach to this, it'll take you 2 months for the capital to actually cross the finish line. We have campaigns that have yielded upwards of $1 million in this time frame, but if you're looking to raise anywhere from 5 to 10 million, there's going to be a discrepancy there. So there's a level of responsibility that we have to educate our prospects and clients on how this whole thing actually works so that you can make the best decision for yourself and not end up somewhere where you are risking your non-refundable deposit or something like that. So this is kind of what you're looking at here is 2 months to actually convert money. So then you can see the challenges of going the deal by deal route. So let's go ahead and look at a fund structure. It's evergreen. It can be blind, meaning you don't have to have the assets identified. That's okay. Because there are some funds that are just, like a mortgage REIT or something like that. It's really independent of the asset itself. It doesn't really matter. You have deals coming across your desk at all times. So your investors are investing in a pool of assets. So it doesn't really matter what the underlying asset is. For something like this, we still apply the same timeline that it takes to get in front of investors. The difference here is that you are not constrained by that 60 to 90 days. This gives you an opportunity to generate a system that takes 2 months to actually go from 0 to capital closed or less, right? I'm using conservative numbers. We've seen investors come through within literal days of seeing the ad for the first time, and within 2 days, the money has landed into the account. So here we have something that is evergreen. You are investing an initial period to stand up the system. And then beyond that, that's when the flywheel effect starts working. Then the raise becomes pretty much real time, depending on who you get and how eager they are to invest. So you might get people who are 6 months out. You might also get people who have cash in hand and are looking to deploy it ASAP. So the downside of going the fund route is how do you create that sense of urgency for somebody to actually deploy the money? Because if it's evergreen, they think, okay, well, I can wait because this will still be open in a month from now. That's where your sales process comes in, and having a way to bring the kind of energy to these calls comes into play, where you have to instill a commitment date, you have to stick to it, and we have a process for what your sales needs to look like in order to get these commitments from people, even if it's an evergreen fund. Now, what if you're not ready for a fund yet? There's still a way from a marketing perspective to take the benefits of the fund model and marry it in with the deal by deal approach. We'll call this evergreen. It's still evergreen. It's tied to individual assets. It allows you to stand up a system and have it run in perpetuity without limiting yourself to that 60 to 90 day window you have to raise the money. While that limit is still intact, you can have a pre-sold audience that's ready to go, that already believes in what you're doing. So when a deal does become available, you just plug it into the back end in front of an existing audience that you've already pre-sold. Here's what this looks like. You're going to have marketing that is going to speak on the asset level. You're going to have marketing that's going to speak on your thesis level. So it's not necessarily marketing that's like, hey, check out this particular asset class. We only have 30 to 90 days to raise the money. That's not enough time. So what you do is you say, hey, We're a group that specializes in build-to-spec industrial warehousing, and that is the only thing we do. In fact, we're so good at it. Here's our track record of all these other times that we've done this very thing successfully, and here's how much we've returned. So over a span of an average investor returns, that's what you're marketing. You're not marketing the individual deal, you're marketing your track record. So you're approaching this from a thesis standpoint, meaning you're making the case that this is your specialty, you are the best at it, and then you're also backing this up with your track record. So when an investor engages with a campaign that's marketed this way, they are approaching this from the standpoint of what would it look like for me as an investor to add industrial spec warehouses to my portfolio? And your marketing is going to be positioned in a way that says, here's how it'll actually impact your portfolio, and here's why you want to do it through us. So the investor is pre-sold. They go through the exact same process from a lead into a meeting. This is where you can discuss your current opportunity with them. This only works when you have these two things. Thing number one, specialization. If you're jumping around from, let's say, mobile homes to now I'm investing in this startup to I've got this crypto fund or whatever, you're not building enough brand equity for the investor to say, oh, okay, these guys have a certain specialty. This is why they're the best in this particular asset class. You have to rebuild brand equity each and every time. And that's just not very good business practice because you're going to be spreading yourself way too thin and not known for any specific one thing. So specialization is going to be key. You're going to be selling them on your thesis and your track record in that very specific thing. Number two is going to be that you have a steady enough deal flow, because if you are pre-selling people on a specific asset class and your track record, but you don't have an investment that they can participate in for like 6 months to a year, that lead is kind of wasted, because the types of leads that we generate and our campaigns generate, they're very close to making an investment decision. And so you don't want to make these people wait super long before they're able to commit. And so they're going to go cold. You're going to have to rewarm them up. You're probably going to lose that investor. So what we recommend is having at least one opportunity per quarter that investors can participate in. So they come in, you might not have anything for a month or two, but you have marketing and a relationship that's being established with them. You're keeping them apprised of what deals you're currently looking at. You're giving them insights into how you're vetting all these things so that when a deal does become available, you can say, hey guys, I know you've been at the sidelines, you've been looking at this thing, you've been watching us work, and we're finally ready to unveil this deal. This is why it's so incredible and why it was worth the weight that's within that specialization there. So that is how you can think about creating an evergreen marketing system that generates investors at any point of the year, regardless of whether you have a deal or not. But if you are in that fund model, we've got strategies on that as well. Just letting you know, it's typically not preferred for us to go the deal route, especially if it's a brand new ad account. We're limited to how much we can invest as an advertiser. We have to kind of earn the platform's trust to be able to continue increasing our ad budget. You're putting a lot on the line to raise the money, especially if you're only doing it from accredited investors. So consider specialization. It's just good for business anyway. And then leveraging your track record and create that steady enough deal flow so then we can create an evergreen marketing machine that you can use to generate investor meetings. And just to actually show you what this can do, check out what this did for one of our clients. This is what he said. This is an email that we got. Our fund docs are in final form and should be up on our website by sometime next week. Meaning he did not have an active deal that he could funnel people into. So he was pre-selling interest using this approach for his investment that he had coming up. He says, we have a lot of pent up interest, probably approaching 20 million at this point. So he had $20 million in soft commitments that he generated months leading up to this point. He said, yesterday I had calls with investors expressing total interest of almost $4 million. So within one day and just a couple of meetings that we generated for him, he was able to generate almost $4 million in interest. So he had a call with somebody who was ready to commit $200,000, and he literally could not take the investor money. They were wanting to invest in his product. This just goes to show how well this whole thing can work. And then he adds a little bit of his perspective as well, where he just says it just takes a little patience. There's a cumulative effect where investors have to sell things, etc. So basically get their money in order before they're able to actually invest. So he's in the process of converting this interest to actual money as we speak. And having this leverage allowed him to negotiate a very favorable position with another group of GPs who are actually the operators of his deal. So this is just something we were able to generate using the Evergreen strategy. So if you found this helpful, do us a favor, sure hit that like button if you are on YouTube, and subscribe to our channel where we're going to be releasing a lot more content like this. If there's anything specific that you want addressed pertaining to getting strangers on the internet to write you 6- and 7-figure checks, let us know in the comments, or just reply back wherever you saw this video with your ideas. It's also worth noting that there are 2 ways to work with us. One specifically is hiring us as your marketing team. Let's have a conversation and see if we're both a good fit for one another. 2, you can invest in our blueprint, which is essentially us training your marketing team on how to build these very systems that we build to get investors investing in this skill set in-house for you guys, which is more of a consulting coaching type of solution versus a done-for-you marketing. So go to raisereadysystems.com and schedule a call with our team if you want to learn more. Hope this was helpful, and we'll see you in the next one.